Hello everybody, in this video I'm going to be doing a brief stock analysis on Kroger, and this is not by any means going to be a deep dive into their financials, but more so me just giving my opinion on the company and a general outlook for the industry. So taking a look at its 5-year chart here, it's a little bit of a slump from 5 years ago, and then they just recovered within the last year. They were all the way down to $20, even though their previous high was at $43, so we don't really like to see that, but they are back up to $35, and I'm sure they will continue growing. And then if we take a look at their 6-month chart, they were not terribly affected in March, especially compared to a lot of other companies out there, especially tech companies or hospitality companies. And if we take a look at their 6-month chart, if you look back in March, you see a double peak there, which is kind of strange looking, but they did reach a low of about $27 from their previous high of $36, but they've already pretty much come back to their previous high, as pretty much the whole market has already rebounded. And if we take a look at their revenue and earnings for the last 4 years, we see really steady revenue and earnings, but I'm actually expecting to see increased revenue and earnings for this year. And that's partially because we're already expecting to see much higher revenue and earnings in Q2 of this year, just because of so many different things selling out, strange things such as toilet paper and canned foods and other necessities that many stores and other competitors of Kroger saw a huge increase in revenue. And now I'm just going to take a look at a few points by the Bulls and the Bears by analysts at Morningstar. And the first point is really that Kroger is doing a lot to increase their digitization, and I think Walmart's, Target, and Kroger are really leading in the industry. And as sad as it is, I think most grocery stores are moving that way to where most checkout is going to be self-checkout. Machines are going to be able to help people in various ways with their customer experience, as well as distribution and unloading and loading of goods in the store is going to be more and more digitized, and not just digitized, but animated. So the grocery stores that are able to get on that quicker are going to be more successful. And then the second point, I don't know if I necessarily agree with it or say it's a strong positive point, but it's with a number 1 or 2 standing in almost all major markets. They benefit from spreading advertising, distribution, and supply chain expenses over large scale or sales base. And you could really say that about any of the large grocery store chains right now. So not a really strong positive point for Kroger, in my opinion. And then the third one is actually a pretty good one. It's that Kroger's customer data set is among the best in retail. It should be able to use information it has to target promotions, inform its assortment, and sell marketing insights. So information systems and data are becoming extremely valuable, and it's increasing in value every year. So if Kroger is leading in the industry, that's absolutely really valuable for them moving forward. And now I'm going to take a look at a few negative points by the analysts at Morningstar. And the first one is that competition in grocery store is fierce from digital and physical sellers alike. And just think about this for a minute. This is kind of going away from what that is trying to say. But if you think about a Kroger trying to open a new store in a town that already has 2 grocery stores, it's really going to hurt sales for the other 2 stores. So Kroger either has to beat out one of the other stores or just make it to where all 3 stores are profitable. So it's really hard spreading and growing a grocery store chain, but Kroger has been able to do that. And then the next point is another one I don't necessarily agree with, just because it applies to their competitors as well. I really like it when these points are more specific to just this company, but it's that there's rapid change in the sector, forcing Kroger to quickly adopt to a new business models such as delivery, click and collect, and data analytics meant for sale to outside parties. And I think you could say this for Walmart, Target, and half a dozen other competitors as well, so not really a strong point there. And now I'm just going to take a look at their research report overview, and I was pretty surprised to see that they were given a 2 out of 5 stars and only a narrow economic moat, but I suppose this is because their bigger competitors Walmart and Target are doing extremely well with their growth and improved margins, but I would say Kroger is doing really well for their competitors of smaller grocers. And they have a narrow economic moat because they do have economies of scale, but still they do have bigger competitors that have even better economies of scale and operations. And then uncertainty is medium. I would say low just because they're already so well established. And then exemplary stewardship. And the reason they do have that exemplary top management is because they have made partnerships in some form or another with Walgreens, Ocado, which is online grocery shopping, Microsoft, and Instacart, which is grocery delivery, which helps them make more revenue without actually spending a lot more money. And I think these partnerships are what's really going to allow them to have a competitive edge over their big competitors. Anyways, I do make a ton of other brief stock analysis videos very similar to this one, so be sure to come and check that out. Subscribe for more content, and thank you so much for watching.